All right, today we're diving deep into one of the wildest corporate experiments happening in finance right now. It's a story packed with huge bets, truly shocking paper losses, and a strategy so defiant it has literally all of Wall Street talking. So let's just start with the big, scary number. Negative $17.44 billion. Yeah, you heard that right. That is the loss, on paper, that a single company reported in just one quarter. It's a figure that's pretty hard to even wrap your head around. So the big question is, how on earth does that even happen? How is it possible to lose that much, even on paper, in just 90 days? What's going on behind the scenes here? Well, let's get into it. The company at the center of this storm is Strategy Inc., which you probably know by its old name, MicroStrategy. And that $17 billion hit, that's what's called an unrealized or paper loss. And it's all tied directly to their massive holdings of Bitcoin. Now, what's just insane is how fast this all flipped. This wasn't some slow decline. We're talking about a complete 180-degree turn from the quarter right before, where they'd actually posted a paper profit of almost $4 billion. That incredible swing tells you everything you need to know about the volatility they're dealing with. So, how can a company's bottom line swing by more than $20 billion from one quarter to the next if they haven't sold a single thing? The answer, and this is the interesting part, isn't about their business operations. It's all about the accounting rules. See, in early 2025, a new accounting rule called fair value officially kicked in. And what this rule does is it forces companies to mark to market their crypto every single quarter. So whatever Bitcoin's price is on the last day of the quarter, bam, that's the value they have to report, and any change goes straight to their income statement. And here's why that's such a game changer. Under the old system, it was basically a one-way street. Companies could write down the value of their Bitcoin if the price dropped, but they could never write it back up unless they sold. Now, with the new rule, it's a two-way street. They have to report the dizzying gains and the crushing losses in near real time. And this table just lays it out perfectly. A massive paper gain in Q3 when Bitcoin was flying high, and then that monster paper loss in Q4 when the price tanked by 25%. The company's P&L statement has basically just become a direct reflection of the crypto market's chaos. So you're the CEO. You've just posted a historic paper loss that would make most people run for the hills. What do? Sell? Panic? Nope. Strategy Inc. did the exact opposite. Instead of backing down, they went on the offensive with this incredibly bold two-part plan. First, keep buying even more Bitcoin. And second, build up a gigantic cash reserve to silence the critics and ride out any storm. Okay, first, the buying. By the start of 2026, they were sitting on over 670,000 Bitcoin. But here's the number you got to focus on. Their average cost per coin is just over 75 grand. That means even with that big Q4 price drop, their entire position is still deeply in the green. It shows you they're absolutely playing the long game. Now for part two of their defense, and this is the really clever bit. Cash. They raised $2.25 billion, and they did it not by selling a single coin, but by selling more of their own company's stock. This cash pile is so important. Think of it as their financial fire extinguisher. It was designed to put out the one fire everyone feared, a scenario where a crypto crash forces them to sell their Bitcoin at the absolute worst time just to cover their debts. This war chest gives them a runway of 1, maybe 2 years. So it sounds like they've built this impenetrable fortress, right? Well, kinda. Because while they were busy building up their defenses, the entire world around them was changing. And this sort of magic advantage they used to have has basically just vanished. You see, for the longest time, Strategy's stock was trading for way more than the actual Bitcoin it held was worth. Investors were willing to pay this extra fee, this MNAV premium, because honestly, it was one of the only easy ways to get exposure to Bitcoin in a regular stock account. It was a convenience play. But as you can see right here, that premium has totally collapsed. At its peak, the stock was worth double its Bitcoin holdings. Today, it's pretty much 1-to-1. And why that's a huge deal is that their special status as the only game in town is officially over. So what happened? Well, it was a perfect storm, really. First, spot Bitcoin ETFs finally got approved, giving everyone a cheaper, more direct way to own Bitcoin. Second, investors started getting a little wary of the company constantly selling its own stock to raise cash. And third, new competitors showed up with totally different ways of doing things. And this brings us to a really fascinating new battle. On one side, you have Strategy, who's making a pure bet that the price of Bitcoin will just go up. On the other side, you've got companies like BitMine, who are buying assets like Ethereum that can be staked to actually generate income. It's a huge difference in philosophy, holding an asset you hope goes up versus holding an asset that actually pays you. All of this brings us right back to this central question, the big debate about Strategy's whole model, and whether its most defining trait is its greatest strength or, well, its fatal flaw. The company's founder, Michael Saylor, has said it 1,000 times. He looks at those wild, stomach-churning price swings, the very thing that created that $17 billion paper loss, and he says, that's not a problem, that's not a bug, it's a feature. But that feature comes with some very real risks. Some have called their model an infinite leverage machine. It pretty much depends on them constantly being able to raise new cash to buy more Bitcoin and pay off old loans. And that whole system only works as long as the markets are willing to give them money, especially with a massive $5 billion debt payment staring them down in 2028. So the main thing to take away here is that while they've managed the storm so far, there are some major tests on the horizon. They've built up their cash, they're running their capital plan, but that 2028 deadline, that is the big one that everyone is watching. So in the end, you're left with two completely different ways to see this story. Are we watching a visionary company rewrite the rules of finance for a digital future? Or is this just a classic story of extreme risk and leverage that we've seen before, just dressed up in new crypto clothing? The answer to that really just depends on what you believe. Is all this volatility simply the price you have to pay for a genius strategy? Or is it just the tremor you feel right before the whole thing comes crashing down? That right there is the multi-billion-dollar question at the heart of this entire incredible story.